What's going on, ladies and gentlemen? Welcome to The Average Investor, where anyone can build wealth, even the average investor. Wealth. Nice. If you're a returning subscriber, I greatly appreciate your loyalty. And if you're a new subscriber, please feel so inclined with your dear heart and dear soul to smash that subscribe button as well as the like button before we dive into this video. Today, we are going to be going over one of the most asked questions on my TikToks, my TikTok lives, and other people's YouTube channels because my YouTube channel community is just not built yet. But that question being, what is an index fund? Now, these index funds that I'm referring to are one of the most simple and straightforward investments that you guys can actually do. And it's something that has, over time, has beat 99% of individual investors, not those average investors that follow my channel, as well as 95% of these hedge funds. That's insane. And I know you're probably sitting there thinking like, why would I invest in anything besides GameStop, AMC, and BlackBerry right now? I think that's honestly hilarious and pretty insane that people are just making a ton of money. Curious to see what happens with all of that. And yes, in the short term, people can make a killing with those stocks and other stocks that are going to be taking off. But on this channel, we're focusing on long-term wealth preservation and focusing on the long term. That's where these index funds and ETFs come into play. Also, you do have to keep in mind that as an average investor, as a solo investor, we are up against people that have hedge funds with tons and tons of money that are investing in tons and tons of technology, and there's no way that we can compete with them in the short term in terms of what stocks to pick. So this is a great alternative. Let me tell you about index funds. All right, so I'm gonna try to break this down in an analogy, and it's a little out there, so bear with me. Also got a new tripod, so we're mixing up the view a little bit to, keep this a little bit more interesting. Anyways, back to the analogy. All right, so picture this. You're a cattle rancher in the late 1800s, and you're tasked with a cattle drive all the way from one side of the United States to the other. Now, keep in mind, this is a long, long journey. It might take a couple years. I don't even know how long that would really take, but let's say it takes a really, really long time, and there's a ton of unexpected things that can occur. Keep in mind, the conditions of this cattle drive are not perfect. You're gonna have all different types of climates. You're gonna have all different types of elevation. All these unexpected things can occur. You might have wolves trying to attack your cattle. You might have other cattle ranchers trying to take your cattle. Tons and tons of unexpected things happening. Okay, and at the end of this cattle drive, you're one from point A to point B. Once you get to point B, you're going to get paid a ton of money, like enough money to live on forever. Okay, now that you have the stage set in your mind, here comes the important part. So you're the one that is responsible for purchasing the cattle from point A to sell it at point B. Now you can either invest all of your money into one bull owning 100% ownership, but that's the only bull you're buying. Or the other alternative is you can buy a whole herd, but you're not gonna have 100% ownership over the herd. You're gonna have a little bit of fractions here and there with every single bull that you're buying. Now, the risk that you're gonna be taking on is on this journey, if you're taking that one bull, there's a good chance that that bull might die. You're putting all your eggs in that one basket. So you could be traveling, you're in Missouri and something bad happens. You run out of food, then boom, all of the money that you've invested in that one bull, gone. No bueno. But let's say, for instance, you're in Missouri again, run out of food for all your bulls. It's okay because let's say, obviously we don't want these bulls to die. Let's just throw that out there. Let's say you run out of food again and two of them die, but you have the whole entire herd left there to go from point A to point B. So you push through Missouri and then you're moving back through and you're A-okay. But all of your eggs were in that one basket and that one bull died, you're donezo. Now let's say you're friends with someone who's selling one of the best bulls in the world. All of your friends are saying, yep, this is the best bull. This one's gonna get from point A to point B, no problem, you're fine. Now the question really comes down to, do you believe them? Are you willing to take this risk? Because you could be halfway through the country and that bull dies. But if you get all the way to the other side, you have 100% ownership in that bull, so you're gonna make a ton of money. But in order to mitigate all of this risk, you can buy an entire herd, again, only owning a fraction of ownership per bull, and you can take it all the way from one side of the country to the other, losing a couple here and there, but you know at the end that there's still gonna be some bulls alive. Okay, so analogy now into index funds. This journey from point A to point B is the uncertainty of the stock market over time. And there's a ton of uncertainty and crazy things that can happen that we've seen in the stock market. We've seen the Great Depression, we've seen the housing market collapse. These are the wolves coming to try to eat your herd. And if you had all of your eggs in one basket and one stock and you're like, oh my gosh, I just lost all my gains on that, then you're kind of out of luck there. But if you invested in a herd, or if you invested in an index fund with multiple different stocks, each having a little bit of fractional ownership, then even if a couple died on the way there, you're still good. So as your journey through life and as the journey of the stock market goes, if you had an index fund, then some things can go down and some things are gonna go up, but you just know if one falls, it's gonna be okay because the rest are gonna stay stable. Now, in conclusion of this wild analogy, and I hope you stuck with me during that, the best thing about an index fund is you're gonna be extremely diversified. So diversification is key here. I mean, I really hope that made sense. And see, this analogy actually goes farther than index funds because I don't want my cattle to die, so I'm actually made ground turkey instead of ground beef tonight. So drop a like for that. Ooh, hot, haha. All right, so let's dive into the index fund part just a little bit more. So the cool thing about index funds is you can buy the entire US stock market, you can buy the international stock market, you can buy this bonds market, you can buy the real estate market, small cap, large cap, mid cap, the list goes on and on. The cool part about that is you will be able to invest in what you believe in, sectors that you want to be holding on for a really, really long time. And also it fits whatever risk tolerance that you want to be going for. I would recommend looking at Vanguard. That's what I personally use. This video is not sponsored by Vanguard at all. I'm not affiliated with them at all. Vanguard, Fidelity, E-Trade, Charles Schwab, and also I have 4 up because do not forget to go and grab your free 4 stocks down in the bio, as well as 1 free stock with Robinhood. Don't forget to do that and hit the like button. And if you haven't already, within those accounts, I would look into opening up a Roth IRA. If you guys don't know what a Roth IRA is, I made a phenomenal video that I'll put right here. Do not miss that one. I would open that first before opening anything else. And on Vanguard, if you are looking to purchase specific index funds, there is a $3,000 minimum. So for some people that can be a lot. So I understand if you don't want to put all of your money there, completely got it. There's also versions of index funds known as ETFs, which are easily more tradable on Robinhood and other brokerages, and they don't cost nearly as much, not that high of a minimum. Now, if you're completely new to index funds, though I'm not a financial advisor, this is something I would look into if I was a beginner. This is the exact strategy that I would take. I would focus on the big 3, which are the total US stock market, the total international stock market, as well as the total bonds market. And then this is the strategy going forward. Buy and hold. Then you buy and hold, buy and hold, buy and hold, buy, and don't forget to hold. No, but seriously, this is not something you guys are gonna be trading a ton at all. I don't recommend that at all. I would recommend buying as early as possible, consistently buying, doing dollar cost averaging over the long period of time, and you guys should see massive gains. Knock on wood. But over the long period of time, historically, index funds have outperformed 99% of these average investors, those people, as well as 95% of these massive hedge funds that are trying to time the market and beat the market, where you guys can go and spend 20 minutes of your time focusing on one thing, index funds, buying it and holding it and forgetting about it. This is great for someone with a 9-to-5 job who doesn't want to sit around watching the market all day, praying to God that the market goes up. Hashtag GameStop. No, but in all seriousness, index funds are phenomenal. They're great long-term holds, and I would definitely check them out. And hopefully after you've watched this video and I gave you my cattle rancher analogy, you have a better understanding of what an index fund is and where to go look and where to start. If you made it to the end of this video, first of all, thank you so much. I greatly appreciate your attention and the time that you've spent on the Average Investor YouTube channel. And if you have not already, go ahead and smash that like button, subscribe if you haven't, and please drop a comment below if you guys knew what index funds were previously or if this analogy helped. And as I mentioned on my last video, I am planning on doing 2 uploads a week. So this is the first upload of the week. Prepare for another one on Sunday. But guys, I'm about to go and finish eating my ground turkey and dinner, but I hope you guys have a great rest of your night, and thank you so much for tuning into the channel. Bye guys.